Welcome back, you legends. I'm Dr. Cal. Long time no see. I did miss you all to death. It's time to get back on YouTube. Things are getting very frisky in the market. I'm going to go through what's been happening recently and what we've been up to the last couple of months in terms of trades, setups, and things we've been watching for a while. So let's jump right in. The Dow Jones up 1.1% today. NASDAQ, half of that at 0.6%. S&P 500 up 0.9%. And the Russell 2000 basically flat on the day. If we take a look at the different sectors in the market, really the big two downers today were Apple and Tesla, especially after that lackluster earnings report from Apple last week. Amazon, Google continue to be the rest of the tech sector. These have been our picks really since pretty much for the last 3 months, and they still have a little bit of meat left on the bone. Let's take a look at the different sectors today. Communication services led the market by Google, followed by financials, real estate, industrials. Then we have healthcare, consumer defensive, and consumer cyclical somewhere in the middle. Then we have technology towards the bottom, and it's all because of Apple really dragging down the sector. If we take a look at the weekly performance, technology is also towards the bottom alongside utilities, which is kind of rare. You don't really usually see technology and utilities both underperforming or outperforming. Usually they do the opposite because utilities are defensives and technology or risk on offensive sectors. Let's jump to the daily chart of the S&P 500, guys. And right off the bat, I want to mention something absolutely critical, and it's the RSI is back in our buy zone, assuming the uptrend is not over yet. Usually, guys, when the RSI dips just below 50, we get the bottom, right? It pretty much happened systematically August 4th. Seems to be the bottom. Then we had May 24th, that marked the bottom. Then we had May 4th, that also marked the bottom. And we had April 26th, that also marked the bottom perfectly. So assuming the uptrend is still intact, yesterday, or I should say last Friday, should be a short-term bottom, not a long-term bottom, not a medium-term bottom, just a short-term bottom. And the market should see continued recovery this week. I do want to point out something absolutely critical that we noticed last week, right after we saw this cluster of candles. So let's take a look at the note that I published just after the market closed here on August 1st. I was listening to AMD's earnings call, right? And I also was watching the chart, and I've been noticing something very interesting. We had 3 indecision candles following the bearish engulfing candle. Following the bearish engulfing candle on July the 27th, we had 3 indecision candles, small bodied candles following a decisive red candle. Usually, guys, this means that bulls are failing to commit, and it was giving me creepy vibes because I saw the exact same setup just before the market topped recently, and I'll show you exactly what I'm talking about in a minute. The put-to-call ratio has also been sneakily rising like we haven't seen in over 3 months, which was a major red flag. And the S&P 500 bullish percent index has been consistently making lower highs, creating a bearish divergence typical of uptrend exhaustion. I published this note just after the market closed right here on August the 1st. And those 3 critical things that I noticed were, first, we had a bearish engulfing candle, very bearish. You want to see follow up to the downside to confirm bearishness, or you want to see consistent buying following that bearish candle to invalidate it. What we ended up with was a 3 candlestick structure formed by 1 indecision candle, followed by another indecision candle at the top, followed by another indecision candle that failed to make a higher high. It looked pretty much, guys, identical to this 3 candlestick structure that we saw back in early July, and then we had that really quick sell-off following that. Unfortunately, guys, I could not really put out a video on August 1st last week. I really wanted to push this out. So I'm really sorry, guys. I couldn't get a video out by that time to talk about this really suspicious looking structure. And we also noticed the PC put to call ratio had already been rising, and it triggered a sell signal just a day before the market top. Look at that. Almost perfect. Kind of strange actually looking at it now. Look at this. Perfect sell signal on our PC put to call ratio. This is a proprietary money time machine buy and sell indicator that I share with the trading community. We had a sell signal just before the market topped. Then we continued to see an uptick in puts relative to calls, and that warned us that more weakness was coming. Even though the market looked like it was stabilizing, flattening, that turned out to be distribution, not accumulation, distribution that big money was selling into. Another big warning sign was this, the triple Qs. If I add the Dow Jones on here, guys, you will see exactly what I'm talking about. Usually, guys, when the market is rallying, you want to see the NASDAQ leading the Dow. What ended up happening was the market was the NASDAQ made its high on July 19th, right here. Then the Dow Jones continued to make higher highs while the triple Qs failed to even fill this critical gap at 385. That was another major bearish signal that I talked about. 3 times we failed to fill this gap right after that bearish engulfing candle. And then we ended up with a gap down and a sell-off following the US credit downgrade. So now it's very clear to me that big money was actually selling ahead of the news. They had an inkling, they had an idea, and there's no question about it. That was insider information. Big money knew that this downgrade was coming, and they were selling into retail traders that were buying this bounce, hoping for a higher high that never came. Okay, so that happened last week, and that led to this sell-off. So what's happening now? Uh, Typical of these very quick sell-offs that fail to fill key gaps, usually that, guys, creates a very negative sentiment, bearish sentiment in the market very quickly. And we began to see that in the fear and greed index. You will notice the fear and greed index went from extreme greed to, look at that, boom, 20 points down in a matter of days, just after that bearish engulfing candle. Usually, guys, the market likes to top when the greed reading is above 75. So we had the market top when greed was extremely high. The NASDAQ top first, then we had the S&P, and the Dow Jones was the last. And very likely the Dow Jones will continue now to move up and make a new high, while the triple Qs will struggle and likely make a lower high. So what are we looking at now? Well, we have a key gap right here at 442. And I want to show you this gap on the smaller time frames on the 1 hour chart. This is, again, another proprietary indicator that I use, guys. This is a stochastic with a very specific set of parameters that allows it to be extremely quick, very accurate in spotting reversals. So in the smaller time frames on the 1 hour chart, clearly we had 2 gaps to look at. The first gap at 446 pretty much filled it, came very close. We filled the gap and formed this beautiful bullish divergence that I talked about at the close of the market in my note last Friday. We had this bullish divergence, which really told us the market was very likely going to form a short-term bottom this week. We ended up with a local bottom. That Friday sell-off was the local bottom. We had a rally. We have now recovered the fast moving average, the green moving average. We really cannot begin a new uptrend until price recovers this gray moving average, the 5-day moving average. So as of right now, we have no idea if this is a new uptrend or simply a short-term bottom and a quick bounce. We don't know yet. But short-term momentum is positive. We have a very large bullish divergence that did resolve to the upside on both the PPO down below and the stochastic, the proprietary stochastic up above. That still means that we have unfinished business at 442. So what I'm leaning towards in the short term, guys, is that we will likely continue to move up, potentially fill this gap, even overcut it, right? Even go even higher to 461 to fill the gap from April of last year, make a slightly higher high and a massive negative divergence, and that will likely mark a medium term top where we proceed to fill the gap down here and potentially even continue lower to fill this critical gap 421 down here. This is going to be critical support. Any major correction will likely stop at 421 and attempt a recovery. So at that point, the 200-day will have probably risen enough so that it will act as support, and the gap will act as support towards sometime early September, mid-September. So what I'm looking at, guys, now is a very quick recovery, short-term recovery, a slightly higher high on the SPY, a higher high on the Dow Jones as well, both forming negative divergences on the daily chart, and that likely putting in a major top for months and months and months, then a major correction down to 420 into September and into October. And after that, we will likely see another attempted rally, and we'll see if that second rally fails at 442, that will confirm this coming up, this upcoming top as the major top, and that will likely end up being a Wyckoff distribution, UTAD, an uptrend exhaustion, right? A rally, another rally, one final trend exhaustion rally with a double top, then a back test, failure, and continuation lower on weaker economic outlook. Now, that is months out in the future, and we cannot really make predictions months out in the future without watching how the market reacts to key zones. So, how the market reacts to key zones is going to really determine what happens next. But that's my current base case scenario, and that is a continuation higher, a double top with a bearish divergence on the 1 hour chart, something that looks like this. And that's when I expect really big time bearish positions to be opened, and all of those bears that really began hibernating as the market was forming this volatility contraction pattern that I talked about in my last couple videos. Last 3 videos, in fact, I talked about this volatility contraction pattern, how it was going to really start a massive melt up in the market. We had that rally. It's pretty much getting to its last legs now. We're in the really final innings of this volatility contraction rally. And really, the hallmark, the number one thing that actually tells me that this volatility contraction rally is ending is the VIX, right? The VIX, the volatility index. What did the VIX do? The VIX actually made a higher high after forming this double bottom. So the VIX went higher. Volatility expanded. That means the volatility contraction is over. The volatility contraction phase of the S&P 500 down here in blue and black, that's over. Now we have volatility expansion. When volatility expands, that's usually when bad things happen. That's when we get really big sell-offs. Really big question now is, how does this sell-off develop? And again, my base case scenario is we get a recovery, a lot of FOMO, a lot of fear of missing out, a lot of buy the dip crowd stepping in, the market rallies into late August, forms a really major top, fills this gap at 460, at 459, and this gap at 461 left from April of last year. And then we form a major top. Then we likely see continuation to the downside after the Fed very likely raises rates again in September in reaction to a major change that's been going on with the markets due to commodities. If you guys remember, if you've been watching my videos for a while, you will remember I talked about commodities potentially forming a bottom in the middle of the year and beginning to rally again in the second half of the year. I talked about that in March, in April, and again in May. And we finally had that bottom here in early June. We had the first higher low for the day for the DJP, the Bloomberg Commodity Index. And we are now very likely going to continue higher. Look at this. We first recovered the 50-day. We held it for a few days. Then we continued higher. We recovered the 200-day. We held it, and we will likely continue to move up. And if I actually pull up the weekly chart, this is a very clear, very obvious. Look at this. This is a very clear bull flag. This is a very obvious bull flag. Massive up cycle in commodities. Then a very shallow pullback. Yet, yes, it lasted for a while. Commodities topped in June of last year. Then they bottomed in June of this year. So we had a pullback that lasted an entire year, a down period that lasted an entire year in reaction to the Fed raising rates. Now that the Fed is coming, now the Fed is nearing the end of the rate hiking cycle, likely the last hike coming in at the September meeting. We will likely see commodities continue to rally in reaction and challenge the Fed's narrative of CPI coming down. So what the heck have we been up to the last couple of months? Well, I'll share with you the biggest setups that I talked about and what happened with all of them. I talked about CAT back on the 12th of June. It was the first time since November of last year where the stock had a breakout on large volume with the PPO crossing above the zero line. So that was a really big bullish development. Then we had a breakout of a bull flag, and that's when I put on a $260 target on CAT to fill this gap right here. Then we ended up filling that gap and rallying even more. So congratulations if you traded this setup. Another key setup that I was watching was Costco. I talked about this back on June 5th. We had the biggest, absolutely the largest, most massive bull pennant I've ever seen in my entire career, and we broke out of it. And that's when I put out this alert that we will now begin a multi-month, potentially a multi-year rally on Caterpillar. On Costco. And this is a name that has actually not yet realized its full upside potential. 600 plus and even higher towards very likely 700. Based on the full measured move, we calculate the distance from the top all the way to the bottom. Then we put that at the breakout point, and that gives us the target. It's actually 752. But even if we go to 600, that'll be a 4, 5, 6x profit if you trade options and if you went long on the breakout. Costco continues to lead, making higher lows, and very likely will continue to lead as more and more of the market begins to turn even more bearish and as sentiment continues to decline. So that's Costco. Then we had Nucor Steel. I talked about this on June 8th, and I had a target of 175 to 180 within the next 3 months. So that means by September. And if we take a look at Nucor, here it is, beautiful breakout, continued to rally. We've tagged our resistance line, our first line of resistance several times now. All of these would have been take profit targets at 174 and again at 174.85. And this is a pretty simple setup, guys. Really strong uptrend, buy towards the lows, sell towards this near term, or I should say the first line of defense for the bears. And these are really big moves, guys. Big moves, 40%. So that means on options, you'd make 5x plus, again, another 40%. Take a look at this one, 46%. This one, so forth, 33%. Lots of upside if you trade options. And pretty simple setup to follow. Watch for the crossover on the PPO and for the fast moving average on the PPO to cross above the zero line. I marked every single time this happened. When that happens, price systematically continued higher to tag the first line of resistance. Let's take a look at Square. I talked about Square. This was my favorite setup. I talked about it as early as May 30th. Again, beautiful, beautiful, beautiful setup. We had a gorgeous bottom with double bottom with positive divergence on the daily chart. Here it is. I talked about it as soon as we broke the 20-day moving average here. That triggered a massive rally in Square. We traded this a few times, in fact, and we ended up hitting our $75 target plus some. We ended up topping at $81. We do have a very large correction now post earnings, which is very good. It will allow us to catch another bottom in Square and catch another monstrous move to the upside. So here it is, the weekly chart, gorgeous double bottom with positive divergence, a push by pattern, very bullish. Again, daily chart marked the breakout, and we had a gorgeous entry here on the back test at 58. So a couple of bucks away from the bottom at this back test. Absolutely perfect entry. We rode it several times to this rally, sold, entered again, sold at this rally, entered again in a sister stock, PayPal, and took profit again towards this high. So we traded at least two times, twice Square and one time PayPal. They both have very similar looking setups. What did we have with Tesla? Well, I talked about Tesla as early as May 19th, and I had a $210 target on Tesla by June 9th. Let's take a look at what happened. Here was really gorgeous breakout. We spotted this back test right here, and this beautiful breakout and close above the 9-day, 20-day, and 5-day moving averages. This pretty much was the breakout. Then I had a $210 target by June 9th. We actually ended up overshooting that target by quite a bit. We ended up, let's see, June 8th, all the way to $236. So a massive, massive melt up move in Tesla. And I had a longer term target of $300. I actually expected Tesla to reach 300 by the end of the year, but we ended up at 300 in the middle of July, which was absolutely spectacular, right? But we had a perfect rejection of this key resistance line, several rejections, key rejections. So when we saw this rejection, we knew that price was going to go back down. Now I'm watching for a back test at 240. This previous area of supply will now act as an area of demand, and Tesla will likely find a bottom here at 240 and potentially at this gap fill area. We did sell down all the way to 240, 244 today. So this could be the bottom, a short-term bottom, just like a lot of stocks. And all of the indices look like they're now beginning to form that short-term bottom. The indices did very likely bottom last Friday, short-term, and they're now beginning a short-term bounce. Tesla likely now forming a short-term bottom and looking for a short-term bounce. It's probably going to be very choppy here, guys. So just be aware that the market is now beginning to turn bearish. So I expect even if we make higher highs, that those highs will be used to unload more and more positions as we enter the extremely bearish, seasonally bearish time of the year, which is September and October. So a lot of setups the last couple of months, beautiful setups, Square, Tesla, Caterpillar, Nucor, Costco, a lot of really gorgeous setups that we traded. And I do want to give a big shout out to Mr. G Mint. Absolutely incredible, incredible return this year, 4,000%. Now, guys, I want you to notice this is total return this year. This is not a single trade. This is the year-to-date return of Mr. G Mint. Absolutely legendary, the best year-to-date return I've ever seen out of any trader ever. So round of applause to Mr. G Mint. Absolutely incredible. Traded AMD, Microsoft, Coinbase, and all of these had really cool setups. Especially AMD and Coin. Microsoft rallied early in the year. AMD and Coin were catch-up rallies, right? They were catch-up moves. This was a gorgeous, gorgeous back test of this support line, breakout, close above the 20-day. This was a gorgeous rally, and we had that insane blow off move after the Nvidia earnings, after they raised their guidance for this quarter. We'll see if they're able to deliver on that or not. This was an absolutely insane trade. Now, to be completely transparent, I actually entered pre-earnings and I ended up closing my position on this spike. I did not re-enter AMD at this point. I ended up trading other setups like Tesla and Square, but AMD was still an absolutely gorgeous, beautiful setup. Another beautiful setup on coin that I did not trade, but that I did in fact was watching very closely was this. This was a gorgeous breakout here on coin, breaking above all of the moving averages on June the 23rd. I never ended up trading coin because the options were very expensive. But this was a really cool trade, and I'll show you why. If we take a look at BTC relative to coin, you'll see that Bitcoin actually had a massive rally, and then Coinbase had this catch-up move. So you would have already seen the rally in Bitcoin, and you would have already had enough time to enter Coinbase and capture a very nice catch-up move. So if you're a Bitcoin trader, you would have made a lot of money on this breakout. Then you would have taken profit, jump chip to coin, to MicroStrategy, things like Mora, things like Riot, all of the Bitcoin mining stocks, cryptocurrency stocks like Coinbase had these really very strong melt-up moves. I did not end up trading any of them because the options were simply too expensive for my taste. Now, I also want to give a big shout out to Sir Sweet Jones. This is the second time I'm giving a huge shout out to Sir Jones, because if you guys remember, I talked about his absolutely killer trades. He made $500,000, right? 480,000, I think, earlier in the summer, trading those big moves in the semiconductors into Nvidia earnings, and he made an absolute killing, $500,000. He went up and outdone himself again, making $1.8 million. Absolutely insane returns. Another big shout out to Sir Sweet Jones, and a round of applause. Absolutely incredible returns. I want to give a big shout out to Livy. He caught the exact top and shorted the market July 7th. Let me show you what's happening on July 7th. This was a masterful trade. Take a look at this, guys. Pick the exact top. So he was looking at this gap fill, and on the 1 hour chart, it's very obvious. Let me show you. Here it is, massive rally on the open. Remember, this is July 7th, so we opened down, rallied massively, came very close to closing this gap, came up just short, and he entered exactly at the top. I have no idea how you did it, Livy, but absolutely incredible trade. He rode it all the way down and made 3,500%. Round of applause to Livy. Incredible trade. I want to shout out Meow, a lot of amazing trades. Baba, 100%. I want to shout out LV Chris, made a killing trading that Costco trade, 162%. I want to give a shout out again to Meow, Verizon, Russell, and the regional banks, all his own trades. Incredible. By the way, guys, all of these guys that I'm showing, all of these profits, they are their own trades. They were not my trades at all. They made those trades. I did share some of those setups, not all of them, just some of them. The whole point of the community is for me to really give my outlook on the market, share the best setups that I find, and trying really hard to time those turns in the markets, those key turns in the markets. And what you do with that information is completely up to you. So that's all I'm doing. I'm just providing my analysis. And legendary traders like Meow, by the way, cool name, end up making absolutely killer trades completely on their own. want to give a huge shout out. I want to give a huge shout out again here, trading that SQ setup, 95% here. Wisconsin trading that SQ setup, but buying shorter term calls, 247%. So absolutely a beautiful round of applause to all of you legends. Congratulations, well earned. Absolutely incredible. That's pretty much what I've been up to, guys, the last couple of months. Charting those setups in Costco, Square, PayPal, AMD, Tesla, Amazon. We traded a lot of Amazon, made a lot of money on Amazon. As it began really melting to the upside, we captured a lot of these moves in and out, quick profit taking, sometimes 50, 60% just in a day. By the way, trading options that are 6, 7, 8 months out. So I don't trade short-term options, guys. I always trade at least 3 months out, just to have that margin of safety. And when you capture big moves like these, even if you go really far out in time in terms of expiration, you can still make a killing, an absolute killing. And Amazon getting very close to my target of 145. Not there yet, but getting super close. Google, I also have a target on Google that I want to share. And it's because of this reason that these names like Google and Amazon are continuing to rally, because they still have these upside targets that I talked about. Google 140, Amazon 140 as well. And things like Apple were already played out, massively overextended, a really crazy looking chart. So I'm not surprised at all that it came down after earnings. Really big watershed style moment. And I want to show you exactly where that price rejected. Do you see this support line? I want to show you what this support line even means. And I drew out this support line going back all the way to the highs of 2020 before the pandemic, again connecting the highs of 2018. And it marked the top perfectly on Apple. But unfortunately, this was one of those trades that really required a lot of patience, because if you shorted Apple bought puts all the way back in late June, you would have had to hold on to moderate to small losses all the way into the end of July. So 1 full month. Then you had your big payday post earnings. So you'd have been holding on to a decaying position. That's why I tend to trade really long-term positions, really long-term options. So far out, 6 months is my usual target. Sometimes I would trade something that's out a year and a half, so leaps. Sometimes I would trade something that's 3, 4 months out. It really depends on the type of setup that I'm watching and how tight my stop loss is. But this was one of those setups, right? It was forming this bearish wedge. We had a break before earnings, then we had continuation and waterfall style selling into earnings. But you had to have really big cojones to continue to hold through this choppy period and into earnings, because you'd have to, because of the usual implied volatility crush of earnings, we tend to shy away from trading earnings plays, unless again I go for something that's 6+ months out to be able to absorb that implied volatility crush. Now, I want to talk about a couple of key charts here. The VIX, again, perfect double bottom, bullish divergence, bullish engulfing candle on the bearish engulfing day, where the S&P had a nasty bearish engulfing day. It marked the top in the market, a top that we saw the market really try to hover after, and then completely fail and sell off. Right now, the VIX is inside my red box of resistance. As long as the VIX remains inside this red box of resistance, we're not likely to see more vicious selling. You will need to see the VIX break above 17.6 or 17.5. Pretty much these highs, and close above for a really vicious sell-off, a 10% or more correction. I think that will probably happen towards the middle of September into the middle of October, but not quite yet. In the short term, I think the VIX comes down, fills this gap, makes a higher low, right? A higher low as the S&P 500 makes a higher high, establishing again another bearish divergence, and that will likely mark the perfect short entry to ride the market down in September and in October. Again, guys, I'll continue to update this outlook as I get more and more data. Let's take a look at the Dow Transports. The Dow Transports down below, industrials up top. Look at this bear flag looking structure. A lot of indecision candles. Very weak looking chart here on the transports. The transports usually lead the industrials. So, for example, when we had this huge bullish divergence, excuse me, really big bullish divergence, significantly higher low on the transports versus the industrials, that marks a critical bottom in the Dow Jones and a critical rotation in the market. This is exactly when we began to see money flowing into the Dow, into defensives, and out of things like the NASDAQ. July 10th, right? This was the last hurrah of the NASDAQ. We end up topping, then we continued to come down, making lower highs. Now, to assess the NASDAQ, I have this beautiful ratio chart that I really recommend everybody to use. And here it is, beautiful ratio chart. Continue to tag the tops and the bottoms in this chart perfectly throughout the rallies this year. We're now beginning to consolidate, or I should say distribute, right, bunching up near the support line. We usually don't like to see that, guys. We don't like to see price action bunching up for weeks at a time near our support, because the longer price trades near that support, the more likely that support breaks. And we did have a few breaks here, but the ratio chart has managed to recover some of those. Today we closed entirely below support for the first time, so likely, guys, we'll see again this ratio chart potentially recover slightly again, with the NASDAQ making another attempted rally that will likely fail, and that will likely produce our much larger correction that I'm watching and that I'm looking for. We have this support line potentially acting as support in the medium term, but I think that will likely get broken, and we will likely go all the way back down to 330 to fill this nasty gap back here. But this is likely, guys, several months out in time. So again, things can change, but that's my outlook as of right now. Let's take a look at high yield bonds up top and the S&P 500 down below. We do have a bullish divergence here. We had that bottom a day before the S&P bottom, the high yield bonds bottomed 1 day before the S&P bottom. Then we had the bottom of the S&P here. We had a really large bullish divergence here. And again, that tends to make me lean toward more likely a short-term bounce here, an attempted rally coming in very soon here as the market finds likely bottoms this week and begins to make that attempted rally in the next couple of weeks. XLY divided by XLP, consumer discretionary divided by consumer staples. I was tracking this top because we had this gorgeous bearish divergence here, beautiful bearish divergence, and we're now beginning to find support at the 50-day moving average, and we're beginning to see the PPO potentially forming a bullish cross soon here. When that happens, Tesla will likely begin to rally again. Let's take a look at gold. Gold continues to form this bullish pennant. I'm still looking for a break above this resistance line for a full measured move that takes us to 190. Let's take a look at the copper to gold ratio. Massive bearish divergence, significantly lower high versus the market down below. A massive bearish sign that the health of the economy is not in line with the market. So the market is really discounting how weak the economy is, because the copper to gold ratio is really a barometer of the health of the economy. You want to see copper outperform gold, because gold is a defensive metal and copper is an inflationary, as an economic metal. When economic activity is heightened, you want to see copper rise relative to gold. And so far, we're getting a bearish divergence. Again, this speaks to the health of the economy, and this will have longer term ramifications. Nothing really short term, just something critical to watch alongside long term treasuries, so TLT, and the TLT relative to the S&P, because when TLT relative to the S&P begins to break out, that's when really horrible things begin to happen. Let me show you what I'm talking about, guys. So up top, guys, is the long-term treasuries, TLT. This is the weekly chart. I'm now watching for a double bottom with a bullish divergence forming, and this will likely be the bottom for long-term treasuries. After that, I believe that long-term treasuries will begin to rally and begin to outperform the market, as the market likely forms the final high and begins to roll over on weaker economic outlook. When is that exactly going to happen? You can pinpoint exactly when that could happen, and that's through the imminent doom indicator, and it's the TLT relative to the SPY. When you see long-term treasuries begin to break out relative to the S&P, that's when horrible things happen. So how can we spot it? Well, in 2007, if you notice, guys, as the market was forming its final high, TLT relative to the SPY had a bullish cross on the PPO. That's the first thing. Then it rallied and it broke the 50-week moving average, this green moving average. So when that happens, when the 50-week moving average is broken, that's when it's really time to get out of the market. That's when recession-led 50% crashes happen. That's when really bad things happen. Here it is, guys. Look at this. That's when we had that economic weakness, that double dip recession in 2015, mini recession 2015, 2016. Again, look at this leading up to that COVID pandemic crash. We had this ratio chart beginning to make higher lows. We're not there yet. We're nowhere near there yet. That tells me that a recession-led crash is still very likely months away, and that that correction, that 10% correction to 420 on the SPY to fill this gap here, will likely be just a correction until proven otherwise. So I showed you HYG, a high yield bonds, the smart money. I showed you Dow Jones transports relative to the industrials. I showed you the triple Qs relative to the S&P 500. I showed you the XLY relative to the XLP. All of these are risk appetite indicators. When they begin to rise, that's when the market begins to find a bottom and begins a new uptrend. When they begin to flash red warning signs, for example, when we had this bearish divergence, that's when it's a sign to get the heck out of the market and turn more defensive. Indicators now are key supports. XLY relative to the XLP is at key support. Triple Qs are key support. High yield bonds are beginning to move up. So again, some short-term bullish indicators here, but we don't know how long this attempted recovery will last. But short-term, we are getting some bullish signs. TLT, long-term treasuries, and the copper to gold ratio are longer-term more economic indicators that will have longer-term ramifications, not as much in the near term, but they're very important. So I always keep an eye out on them, and I always try to update you guys with regards to what's happening with them. Now let's talk about the CPC, which is the total put to call ratio, and the PC, the put to call ratio for the S&P 500. Both of these guys are flashing really red flags. PPO crossed up and is gaining momentum. And usually, guys, what I like to see in major market tops is the S&P 500, this blue and black chart, make a new high, higher high, and then the put to call ratio making a higher low. Again, that forms a bullish divergence. Excuse me, a bearish divergence. So I'm looking at the PC and the CPC for a bearish divergence. I'm looking at the PPO for a bearish divergence. I'm looking at I am looking at the VIX to make a higher low. All of these will be key signals that whatever rally we get is actually just a fake money grab, an attempt by the big money to really unload positions um, surreptitiously, unknowingly to retail traders who are likely now looking at this dip to try and buy it, which is completely fine as long as you know that there's this risk that big money will begin to unload positions as we make very likely a higher high. That's a false, likely going to be a false breakout for a larger sell-off, larger correction in September and in October. Let's take a look at the fear and greed index, guys. I talked about this. Usually the market finds a top above 75. That's when we had that bearish engulfing top candle. Market momentum, price strength, breadth, put to call ratio, all of these showing greed, market volatility, and safe haven demand all showing neutral. So the market is still being very greedy. And when you see the VIX close above the 50-day moving average and stay above, that's when big corrections happen. And that's why I'm on the lookout now for that fake counter rally, that counter move that's likely now beginning, and for a top to form very soon, probably within the next 3 weeks. In terms of economic events, we have a lot of Fed speakers throughout this week, but no big reads until CPI on August 10th. This is going to be tense. This is going to be really tense. The CPI reading on August 10th is going to be tense because, as I showed you guys, commodities are soaring. Then we had PPI. Really, commodities will reflect more in PPI, but they will also do in headline inflation. So August 10th, August 11th, if we see the market really form this very quick recovery, this quick rally into August 10th, August 11th, let's say the market continues to rally and overtake this high by August 10th or August 11th ahead of CPI, that'll be a nasty sign that potentially this is going to be a trap. So hold on tight if you have money, if you have cash on hand. You don't need to be jumping in and out of the market. Obviously, do whatever the heck you want to do. It's just my opinion, guys. For me personally, what I tend to do when things look really messy, choppy, I tend to shy away from over trading. Probably just trading high quality setups with long-term expirations on options, or just going stock, or just sitting on the sidelines and watching. Sometimes that's worth doing. As of right now, I am in a trade and a high quality setup that I do think will participate in this counter trend move that's now likely beginning, and I'll look to take profit. By the way, guys, I did run a 70% discount to celebrate the 1-year anniversary of Money Time Machine. So thank you so much, guys. I did not announce it initially. I only wanted it for existing members. Initially, I only gave this discount to existing members who are looking to upgrade to the annual membership, or who were actually just Ghost Legends that I upgraded completely for free to Resurrected Legend. By the way, guys, the difference between Ghost Legend and Resurrected Legend is that Resurrected Legend is a special status that I gave completely for free to all existing Ghost Legend members, making them all equivalent to Living Legends. So that's a free upgrade to the $120 per month Living Legend membership. All existing Ghost Legends got this free upgrade when I announced this promo to celebrate the 1-year anniversary of Money Time Machine. If you're looking to take advantage of this one time, really, I'm not ever going to do this again. If you want to take advantage of that, pretty much get the Living Legend membership at a 70% discount. You can opt for the Resurrected Legend annual. You have to pay annually, otherwise the membership will be canceled automatically and the payment will be rejected. If you want to pay monthly, you can sign up for the monthly Ghost Legend. If you sign up for the monthly Ghost Legend, as of right now, you will get the free upgrade. You will get the Living Legend equivalent status, which is called the Resurrected Legend. So I'll probably, guys, end this sale by the end of the week. So if you want to take advantage of it, it's available as a thank you, as a deep thank you to all of you who have been with me for the last year. I'm incredibly grateful. Money Time Machine would have never existed without you. Uh, and I also want to say this, guys. The last couple of months have been absolutely crazy for me. They've been absolutely insane. I'm still going through a lot of things right now, guys. So I've been incredibly busy doing a lot of things. But more frequent video updates will be back after next weekend. So after the next weekend, I do have a lot of things to take care of, personal things into next weekend. But after that, so from the middle of August, I'll be back uploading more frequently. uh and I do, guys, miss uploading. It's not that I don't want to upload or that I just want to share my stuff with paying subscribers. Obviously, guys, the trade setups are always going to be exclusive to the Discord trading community members, but my analysis of the markets, where I think things are going, my economic outlook, all of those things will always be free on YouTube. I just haven't been able to get around to putting out a video. And I'm actually, guys, actually still going through some really crazy stuff. But I had to get this video out. I really regretted not being able to put that video out before that sell-off. I'm really sorry, guys. I really feel bad about that. There were a few key moments that I really wanted to make a video. I just couldn't make it happen. So I really apologize. I really tried to do that this weekend as well. It just did not work out. But again, guys, I promise after next weekend, I'll be back uploading more frequently. Doesn't necessarily mean every day. I don't think really you need daily updates when the market is doing nothing, when where I'm just saying, oh, we're still in an uptrend, we're still in an uptrend. It doesn't matter, right? It's not important. But when key things happen, for example, when I spot the volatility contraction pattern, and I think there's a massive rally coming, I need to share that with you. When I think the market is beginning to form a significant top and a major correction happening, I need to share that with you. Uh, so again, when things are really bad in the market, when things are extremely volatile, that's I believe that's when you guys are actually looking for videos and looking for guidance. That's what I tend to do. That's when I tend to actually try to look up other respectful channels that I really love. Things like Figuring Out Money. So shout out to Michael Silva from Figuring Out Money. Absolutely incredible analysis there. And obviously FX Evolution. Unfortunately, FX Evolution does not do free videos on indicators. They just do price action analysis, which is very valuable and very good. But it's lacking the it's lacking key indicators and things like the put-to-call ratio, the CPC, even simple things like bullish and bearish divergence on the PPI, on the PPO and the RSI, and things like that. They don't cover that on the channel. I don't know if they do it in the private community. I'm not sure if you guys subscribe to their private community. Do tell me if they do that, but I don't believe that they do that. There are channels that I really like as well, like of course Ron Walker. Uh, I just tend to have some differences, some disagreements with Ron. I have a lot of respect for Ron. I just think there are some differences between how he and I look at things. I'm more quick to switch between bearish and bullish. I think Maverick and Ron are slower in terms of switching from bearish to bullish. I'm by no means the best analyst or anything like that. Absolutely, I don't think of myself that way. I just think that I do something that's a little bit different and that a lot of you find value in. And I do absolutely miss sharing that with you. And that's why I'm promising everybody that after the upcoming weekend, not the weekend, guys, after the weekend, I'll be back uploading more frequently when I see key things happening. So that could be 2 to 3 times per week and maybe once every weekend or something like that. We'll figure it out. But when things really get crazy again, when we have really insane, choppy, bear market like behavior, that's probably when you'll need daily market analysis. That's probably when I'll be back doing daily analysis. However, throughout the last couple of months, all of the focus really has been on finding high quality setups, and those trade setups in the Discord community, the trade setups channel that's exclusive to Discord members. That's what tends to make the difference in cyclical bull rallies. By the way, guys, I talked about the cyclical bull rally emerging in this bear market as far back, I believe in April or March, something like that. I talked about it. In fact, let me pull it up just to show you what I'm talking about. Yeah, there it is. Here it is. Very rare cyclical bull rally emerging within bear market. I talked about this. Let's see. When was this? April 30th. So that's when it was becoming more obvious to me that this was consolidation and not distribution, and that the market was going to make its first higher high since this sell-off. And so this was a cyclical bull rally, this entire move up, cyclical bull rally, likely going to extend a little bit further here, cyclical bull rally, and a big top coming in the next little while here with a bigger correction down to fill this gap. And we'll assess from that point on whether we'll get a lower high and we go down. Maybe we get an equal high, a higher high. We don't know yet. We really have no idea how long this inflationary cycle is going to drag out, how long the Fed will keep interest rates this high. We don't know, a lot of unknowns still. So we'll trade it 1 month, 1 week, sometimes 1 day at a time. So again, guys, if you want to take advantage of this free upgrade to the Living Legend membership, you can sign up for the annual Resurrected Legend membership at $35.75 per month, which is actually a single payment of $429 per year. You have to make that a single payment. Otherwise, it will be canceled automatically. If you want to do monthly instead, if you just want to try it out, guys, you can do the Ghost Legend monthly. It will be automatically upgraded to the Resurrected Legend when you're in Discord. This sale will continue until the end of the week, guys. So you can still take advantage of that. Don't sign up for the Living Legend. Just don't do that. Go for the discount. The discount is still active. It will end by the end of the weekend. And from that point on, if you want the Living Legend tier benefits, which include things like making chart requests, trade setup requests, advice, messaging me privately to ask me about whatever you want, that's exclusive to Living Legend and Resurrected Legend. So when the sale ends, Ghost Legends will not be able to do that. So again, if you want to take advantage of that, if you want to pay annually, go for the annual discount. If you want to do monthly, go for the Ghost Legend, which will be upgraded to Resurrected Legend. By the time this video is out, I will change the name to Resurrected Legend just to make it clear, so that you're getting the free upgrade, which is more than 50%, actually. 55 divided by 120 is more than 50%. So more than 50% if you go monthly, 70% if you go for the annual membership. Again, you don't need to sign up for anything if you want to. It's not like this is the only way to make money. There are hundreds and hundreds of ways to make money in the market. But if what you're looking for is my daily analysis and setups and things like that, that's how you get them. And before I end this video, I want to talk about seasonality. And this is the Dow Jones seasonality. If you notice, guys, in August, we tend to have the spike up, a higher high versus July, and an even higher high in September, as the NASDAQ tends to underperform and not even take the July high all the way until December. So this is going to be a prolonged period of weakness if this year follows typical pre-election year seasonality, and we'll see a rotation continue into Dow Jones and defensives in general. So defensive names like consumer staples, utilities, etc., those names will likely now continue to make higher highs as the NASDAQ begins to really struggle. That's all I have for today, guys. Thank you so much for watching. I miss you all, and I hope to see you very soon in the next video. Take care, and I'll catch you in the next one. Bye-bye.
Oh, wow.